Hi everyone, welcome back to Berich. It's me Vinod. Today the market is on a holiday because in North India we have Ambedkar Day, and down here south in Kerala, Chennai, and Tamil Nadu we have New Year, Vishu. So for those of you who are celebrating it, happy Tamil New Year's and happy Vishu. At the end of the day, I'm sure you've already done your celebrations, but since your first time you're seeing me, I wanted to get it out there. Today I wanted to talk about the implications of what Donald Trump is doing and how sometimes even fringe theories come to fruition. At the end, I'll explain what Charlie Munger said about all this and why you should pay heed to what is happening, especially in the bond market. Bond market is always looked upon as something, why do we follow it? Why do we care about interest rates? Why do we care about currencies? But once in a while, these instruments can become very important to understand what is happening. What has transpired over the last few days, last few days or last week, was very clear that Mr. Trump doesn't control everything he thinks he controls. And that happened when the bond market shook. What does it mean when the bond market shook? I did explain it in the video last week when I spoke about what Howard Marks said. But I wanted to dive down into a little bit today to why it is very, very important that you understand what seismic shift is happening in the world. There are a lot of fringe theories we've been talking about, such as de-dollarisation, and how the dollar will be abandoned. And even I never thought it was possible. Even my brother doesn't still believe it's possible, that everyone still does. 99.9% in all trade is still in dollars. People still use dollars as reserve currency. We still talk about the mighty dollar. But there seems to be cracks appearing in it. And the bond market last week did show those cracks appearing and those fault lines showing in reality that it's not a theory anymore, that in reality it can happen and can happen very, very fast. Faster than even the President Trump can react to it. And this is the main reason he's rolled back all these tariffs which he imposed. And now he's floundering with even the tariffs he has on China. Over the weekend, he has removed the tariffs on all electronic goods like laptops and phones. So the only people who seem going to be hammered with tariffs are basically toys. Any parents and children who like buying toys from China are the ones who will have to pay a lot of money. Of course, there is still a lot of tariff. I'm not saying all the tariff is gone and everything is back to reset. It's not that. There's still overall an average of around 27% tariff in America for goods coming in. So there is that. But this crazy thing which was happening, where he went all out, that he has been reprimanded, slapped on the wrist, and he went back because global banks and global financial institutions and countries all got together and said, okay, Mr. Trump, if you don't want to do business with you, here's your dollars, take it back. We don't want to do business with you. And that started happening. There's a famous book which was written, not famous, I read it over the weekend because there's a book which is very interesting book, which I would say you should read. It's called Bucking the Buck. Okay, and the book is very nicely written, and if you want to understand what is happening globally, macroeconomics and geopolitics, especially right now, because when the book came out in 2023, it was considered like a fringe kind of an idea. The author was criticized for it, and not many people thought much of it, because how is this ever going to come about? Because the central premise of the book is sanctions are powerful, but when sanctions are overused and overdone, it's like calling bluff all the time in a card game. It starts kind of erodes trust. So people don't stop believing you from now on. So every time you play bluff, and you keep on bluffing, then everybody assumes you just keep bluffing. It's like that. And de-dollarization was another thing in the book talks about, that how the fringe, it used to be spoken, whispered in conspiracy halls, that this de-dollarization, but now it's coming more and more into reality because gold reserves are rising. Central banks are buying more and more gold rather than hoarding dollars. Because usually the trend is when global uncertainty is there, everybody runs to the dollar and everybody hoards dollars. But because of years and years of this geopolitical tension and sanctions on China and Russia and all over the world trying to control and police, people are fed up. So people are now, whenever they get cash, they rather buy, central banks especially, rather buy gold, and those reserves are rising. The book talks about that too, that being another thing. And weaponizing finances has long-term consequences when you do these sanctions, and like America being the policeman of the world. And we don't realize these consequences, long-term consequences, like smoking cigarettes. A lot of young people don't realize the long-term consequences of smoking cigarettes till they're 70. Then they realize, oh my God, I shouldn't have smoked when I was younger. I shouldn't have done all this. I wish I hadn't done, because your lungs have become scarred and your lungs are starting to fail. Same thing like with climate change, same thing with weaponizing and pulling out sanctions on everybody and trying to sanction everyone. So the book talks about all this. Of course, the book was written much before Trump came into power right now, and the authors, he talks prophetically now. It's looking back at the book. It's a very interesting book. So those of you who want to read it, do read it. I did put it up on Instagram saying this is what I'm doing, reading over the weekend. So that's one of the books I was catching up on. So how is this all coming to reality? One, the erosion of the dollar as a safe haven status is going away. It's already plunged to a 3-year low, right? US dollar index, as it's called, it's fallen below the 100 mark, and it's a 3-year low right now. And the Treasury yields are surging, and that's indicating sell-off. So what does that mean? A lot of you don't understand what's Treasury yield. If something is becoming more expensive, then why are you saying it's under pressure? Why do you mean there is selling? So let me explain that very simply. Let's say you have a 100 rupee Treasury bond, right? 100 rupee Treasury bond you buy, and you're given 5 rupees interest, right? So every year the government is giving you 5 rupees for this 100 rupees. So you're getting 5%. That is the yield of the Treasury coupon. Now tomorrow you want to sell it. No, there might be a demand for it, and you're able to quote 102. That means that you're not getting 5 rupees for 100 rupees anymore, because since you're paying 102, the yield is dropped. Because now for 102 rupees, you're getting 5 rupees, right? Though you have paid 102 rupees for it. The reverse can happen too. Let's say everybody starts going to the market and trying to get rid of bonds. Like what happened last week. A lot of Japanese hedge funds, something known as bias trading. Those of you who are interested should Google it. It's too big of a topic to do in a short video, but you can Google it. If you really want me to talk about it, put it down in the comments. What is bias trading? I'll try and do a explainer on that. So a lot of hedge funds got into bias trading. They were jammed up. Usually banks will try to cover these positions for them. Banks said, sorry boss, we're not covering. So they had to get into the market and dump these treasuries. This led to a lot of sellers for these treasuries in the market. There are no much buyers in the market because nobody wants to buy it right now because they're angry with Trump. And even the Fed was finding it hard to sell fresh coupons, 3-year coupons. So what does that mean? I'm quoting 100 rupees for the same 5 rupee bond. No one's there. I say, okay, give me 95. No one is there. I'm saying 90. So that means the yield is going up. For now, 100 rupees is getting 5 rupees. Now for 95 rupees, if I'm getting 5 rupees, that is already gone to 5.2. So you get the math. So the yield surges. As the selling pressure increases, the yield goes up because you're getting it more and more at a discount, these bonds. So that is what it means. So that shows there's a lack of confidence in the dollar and in the Americans' capacity to do business and pay all this back, because at the same time, the American debt is also rising. That is another problem which they're having, which a lot of people have been coming. Even Ray Dalio came and spoke in CNBC or one of those channels, NBC, he came and in the morning spoke, where he spoke about how he's trying to encourage all the senators and House representatives to sign on a pact saying somehow they will lower this percentage of debt which they're sitting on, which is all very nice to hear, but it's very, very difficult to do. It's just not a question of cutting costs. It's a question of being more efficient. And these tariffs are tools which you can use. But the problem with tariffs compared to sanctions is, sanctions are like a sniper, right? You can target your sanctions specifically to a bank, to a product, to a company. It's very targeted hitting. What happens in terms of tariff is like a broad hammer, which are hammering everything. Sanctions cuts people off from a market. Tariffs, you're saying you can come to my market, but I put an entry fee. So this has led to a lot of sentiment against the Americans, and these tariffs have been yo-yoing, right? It's gone nuclear now with the way Trump is going. So with the implications of all this, there's further problems. There is anger or there is fear. Like anger is because of tariffs. Fear is because America might slip into a recession, or even worse. You know, people are talking about depression. I don't think we'll hit depression, but it'll be a severe recession. It might last little more than what we want it to last. And of course, debt is a huge problem. This is all leading to more people looking for alternatives. One is gold. Other people are looking for other currencies, like the Swiss franc has suddenly become considered a currency of security, because the Swiss are always been very stable and very neutral in everything so far in history, at least so far, touch wood. So all this considered, This is where we are standing. So keep all this in mind when you enter the market tomorrow and when you're looking at investing. Yes, maybe Ray Dalio is right. There is a cycle change happening, the long cycle, short cycle, as he says, the big cycle. And maybe there's a slow change in world order. But he doesn't feel it's right now happening. He feels the Americans still have most of the cards in their hand if Trump plays it right. This is where I come back to what Charlie Munger famously said about Elon Musk. Never underestimate the man who overestimates himself, right? So he's talking about someone being very brilliant, okay? And at the same time, you can't bet against him because sometimes he'll pull off something like, SpaceX or Starlink. This is also true with someone who's not very smart. If you take someone who's overconfident, who lacks knowledge of what is happening, they can also do some incredibly stupid things. I don't want to mention names here. So you can put whatever name you want to whomever you would like to consider lacking intelligence right now. One thing is very certain. There are people in extreme positions of power who seem to be acting in ways which are against the norms and threads of society. So fringe theories now can come into fruition thanks to all this disturbance, as they say, in the force. So keep this in mind during these turbulent times, to invest with prudence, to be cautious. These are not the normal ways we see markets moving, like the 2007 crash or the 2000 crash or the dot-com bubble. Their fundamental way we were working in that world, the way we were doing trade, was not questioned, was not brought to light. We still worked together as a species. We still worked together as countries. Even during the COVID pandemic, the globe got together. We tried to rally around each other. Of course, it all fell apart soon. It didn't last. Kumbaya didn't last as long as we hoped it would. We turned on each other, as always we do. But this time it's different. So if you see an opportunity because the stock has dropped, understand why it's dropped and what is happening before you decide to put a lot of money in it. This is true for the American market. This is true for the Indian market. This is true for the Japanese market. This is true for any market. My strategy, like I've been saying and harping upon, is stay defensive. Companies which have most of their market share domestically in the same country is very helpful, right? Means they have a moat from these tariffs or whatever is happening outside their country. Second, pick a company or a sector which is kind of recession proof, like FMCG, because people still need to drink coffee, have biscuits, have a shower, soap, deodorant, clothes. We still need to buy them. AI is not going to get rid of any of that anytime soon. So keep all this in mind as you invest and try to remember these things don't last forever. Even the Great Depression, market crash, we moved on. World War I, World War II, we moved on. Dot-com bubbles, we moved on. Things we move on. So eventually, even Trump will be out of office. Trump will be gone. Trump will be forgotten by the time you reach my age, especially those of you who I met in the beach who are the age of 24, 27. 20 years from now, Trump will not be around. Even through the miracle of science, if he is around, I don't think he'll be in any shape like what we're imagining him to be today. This is even true for me. I'll be a time when space will come when I'll be gone too. So keep all this in mind as you invest, right? Be strong, be brave. Don't get carried away with your emotions. Never underestimate yourself or overestimate yourself, like Charlie Munger says, and try to be prudent in your investments. Thank you for watching Berich. Tomorrow is a short week we have. Only have Tuesday, Wednesday, Thursday. Friday is again a holiday. So whatever impact it will be in the Indian market and opportunities we see in the Indian market are going to be these 3 days. Of course, those of you who are investing through IBKR or whichever way you're invested outside India, for you markets are still available because American markets are open. If you are investing there, be careful and be aware of all the things that are happening. Just don't buy stocks out of purely passion or saying something just dropping in price. Thanks for watching Be Rich today. Hope you had a wonderful day and a wonderful evening. See you again tomorrow with something more to offer you as markets open. Nothing else more to say. Good night.